financial crisis in 2008, the housing bubble that preceded it, and the Great Recession that followed.
American consumers are now loaded up with debt, and the very nature of that debt, you know, a lot of people in this room understand that because you're in the mortgage industry. You know how many people own adjustable rate mortgages. Because as I said, when these adjustable rate mortgages reset, a lot of people are going to be in a situation where they can't make these payments. Even if they cut back everywhere, they can't make these payments. The way this subprime market works, and I didn't even realize this until I did the research to start shorting this stuff, but 65% of the subprime mortgage market, 65% of those bonds, of those mortgages where a guy stated income, no doc, negative AM, risky loans, 65% of those things are repackaged by Wall Street and rated AAA. AAA. The equivalent of sovereign debt of the best credit quality governments in the world. How can it possibly be? That piece of paper should be rated F, and it will go to 0.
Ben, there's been a lot of talk about a housing bubble, particularly, you know, from the Fed, from all sorts of different places. Can you give us your view as to whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong. We've got a growing economy, jobs, incomes. We've got very low mortgage rates. We've got demographics supporting housing growth. We've got restricted supply in some places. So it's certainly understandable that prices would go up some. I don't know whether prices are exactly where they should be, but I think it's fair to say that much of what's happened is supported by the strength of the economy.
What you just said is one of the most insanely idiotic things I have ever heard. At no point in your rambling, incoherent response were you even close to anything that could be considered a rational thought. Everyone in this room is now dumber for having listened to it. I award you no points, and may God have mercy on your soul.
Peter, you have been mocked on all of these financial shows going back to 2005.
Oh my gosh.
Going back to 2005, and not only did you predict problems, you actually explained what was going to happen.
These sky-high real estate prices are going to come crashing back down to earth.
First of all, I have no idea what Peter Schiff is talking about. I agree with Tom. I think they're going to be up, probably up to about 10%. What artificial lending standard are you talking about?
Most of the profits that people have in real estate are going to vanish, just like the profits in the dot-coms in 1999, 2000. It's a fantasy. People can't sell their house.
Subprime is tiny. Subprime is a tiny, tiny blip.
It's not tiny, and again, it's not just subprime. It's the entire mortgage market, right?
All right, well, Tracy, you're disagreeing. You're simply wrong about that.
No, I'm not.
The financials, as I keep saying, are just super bargains.
Stay away from the financials. They're toxic. They're not cheap. They're expensive. You think they're at? Well, let me finish.
So pessimistic.
Their earnings are going to disappear. I remember a year ago
no earnings. Their earnings are huge.
Ben, last year when people were talking about the party is over for the United States, we cannot continue borrowing to live beyond our means. So as expensive as real estate got, right? That's how cheap it's going to get. People are going to be completely amazed at the prices that houses are going to be selling for in a few years.
Range left. Here they come to sell them again. 9.5 straight night, 20 straight night, even straight here. Now, guys, 8 halves are trading as well. Once again, guys, they're going to get it 8 halves straight. 8 even offer. 7 even offer. 6 halves are trading here now. 6 evens are trading. 5 evens are trading.
But I knew that housing prices were going to fall. I mean, I remember when I would go on television and talk about housing prices falling, and people would say, well, that's not going to happen. That hasn't happened since the Great Depression. That's impossible. But people would ignore everything that had happened in the last 5 years. They would see, here was housing prices. They was like this. Then they went straight up. And said, well, they can't, because they've never fallen, they can't fall. So, but they've never done this. How are they going to stay up here? you know, they were saying it was like a permanent plateau. Lax lending standards, the lack of a down payment. Everybody knows all these things that we did wrong, right? That we had too many people buying houses and credit was too cheap. So everybody can agree that we need to go back to a prudent form of lending. But nobody wants to go back to prudent pricing. Everybody wants to go back to sound lending principles, but leave the bubble prices intact. That's impossible. But the reality is, of course, you know, the best thing that can happen to the real estate market is that prices come down. You know, it used to be that the mission of Freddie Fannie, before, you know, they went broke, was to try to make home ownership affordable. Now their mission is to keep home prices high, to keep homes unaffordable, to make sure that we have to mortgage ourselves, you know, to the hilt to buy a house. The government solution is high prices but low mortgage payments subsidized by the government. The free market solution is low prices. Because if real estate prices go down, you don't need to borrow that much money to buy a house. But, you know, the government still looks at the problem that home prices are falling. That's the solution. The problem is that they went up. But unfortunately, all the blame is on the free market. All the blame is on capitalism. It's because there wasn't enough regulation. There was too much greed, right? And, you know, President Bush, in one of his speeches, said that Wall Street got drunk. And he was right. They were drunk. So was Main Street. The whole country was drunk. But what he doesn't point out is where'd they get the alcohol? Why were they drunk? You know, obviously, Ben Bernanke is out there trying to lay the foundation now for more QE because he knows that he can never taper. He's just bluffing. He can't tell the market the truth.
We do expect that there's going to be a taper tomorrow, correct?
Oh, we do.
You know, the market that lives by QE dies by QE. And, you know, people are starting to factor in tapering. And if the Fed tapers, this market's going a lot lower. I don't think they're going to taper. I think they're just bluffing. I think it's all talk. I think the Fed knows that they've built this phony economy, and they're going to keep inflating it. So they're going to keep talking about tapering, and they're going to talk about why they're going to do it in the future, but why they're not going to do it right now. But they're going to keep making up excuses why they can't do it. And if they actually do taper, they're going to be untapering very quickly, and that's going to be very problematic for their credibility.
Oh, my God.
Maria, I think the most amusing thing I've heard today is that the Fed is doing a fake out on all this.
The FOMC expected to, by some at least, to taper its $85 billion monthly bond purchases by $10 billion.
Economists expect the Fed to begin cutting the $85 billion that it buys in bonds and mortgages every month by about $10 billion.
I say they'll cut the money printing by about $10 billion, move it down to $75 billion a month.
Markets expect a taper from the Federal Reserve, and actually a little bit bigger than I would have thought, but their average is $15 billion.
Participants at CNBC's Federal Reserve survey expect $14.5 billion to be taken off the table. Now, JP Morgan analysts have been the most hawkish out there. They're predicting the central bank could taper bond purchases by as much as $20 billion. Barclays, though, expects the Fed to draw back by $15 billion, 10 from Treasury purchases and 5 from mortgage-backed securities. Goldman Sachs, though, is staying in the middle of the road, predicting $10 to $15 billion worth of tapering.
I think, you know, when the Fed gets a good look at what's happening with oil prices, what's happening with stock prices going down now, real estate prices now turning south, corporate earnings going down, I think the employment picture is going to darken. I think this is another reason for the Fed not to taper, which ultimately might be what saves the market from a bigger decline, is going to be all the new inflation and the fact that the tapering talk is put back to sometime next year, and then again they'll come up with another excuse why they can't taper.
You're already seeing the anticipation of the Fed taking the training wheels off the economy.
Even though I believe the Fed's going to do more QE, and even if they make the mistake, you know, in their mind of tapering in September, which I don't think they're going to do, but even if they do that, they're going to have to undo it probably by the first quarter of 2014 and really open up the monetary spigots even further. But I don't think it's what they should do. What they should do is stop all QE, and they should start shrinking their balance sheet. But what they should do, and what I think they're going to do, are two entirely different things.
Right.
Because the Fed is going to act for political reasons, short-term expediency. They will never do what's right for the long-term health of the U.S. economy.
Whatever.
You know, the Fed has worked pretty hard to get to this position. That is, they've set themselves up to begin the taper. They wouldn't begin if they didn't expect they were going to be able to continue. But, you know, there may be something in the statement that surprises people. Or maybe the magnitude of the tapering will surprise people.
Federal Reserve decision. What are we getting, Steve Leisman?
No taper. The Federal Reserve did not taper. $40 billion per month in mortgage-backed securities, $45 billion per month in treasuries will continue to be purchased. The Fed says, taking into account fiscal restraint, the committee sees improvement in the economy from a year ago, but it decided to await more evidence that progress will be sustained before adjusting the purchases.
Wow, no taper. Just to reiterate here, the Federal Reserve surprising most everybody out there. Plus,
Bob Bazzani, you put out a note this morning from the floor of the stock exchange, and you're saying the tapering expectations were remarkably consistent, that pretty much everyone you spoke to was expecting a taper of like 10 to 15 billion. Now that they did not get their expectations, what are they all saying? What are they doing?
They are just shaking their heads down here. I mean, there was nobody who had zero.
I don't think they're going to taper. I think they're just bluffing. I think it's all talk.